Regulators, rogue states, and remittance markets all collided in crypto today, exposing just how thin the line between decentralized and controlled really is. From a New York landmark settlement to North Korea's creditors racing to seize frozen Ethereum, the walls around DeFi are closing faster than most expected. New York's Attorney General settled with Uphold, a crypto trading platform, for $5 million. And the key detail is what makes this a first. Regulators didn't target the company that created the yield product, an investment that pays out interest on crypto holdings. They went after Uphold for promoting someone else's. That's a new legal theory. Every app that earns referral fees by pointing users toward yield products just got a reason to revisit its compliance strategy. Families holding terrorism judgments against North Korea, debts the regime has never paid, are now trying to seize Ethereum, the second largest cryptocurrency, frozen on Arbitrum, a blockchain network built on top of Ethereum. The funds belong to Kelp DAO, a DeFi, decentralized finance, meaning automated financial protocols that run without banks, protocol whose assets were locked after an unrelated hack. A governance vote by a group called DeFi United could release those funds, which is why the creditors are moving now. First to the money wins. Bybit's new research puts a number on an overlooked opportunity: $112 billion in annual remittances money migrants send back home, crossing Latin America outside the US to Mexico corridor. That corridor, the world's largest, actually shrank 4.5% in 2025, while other regional routes grew. A structural shift that stablecoin firms, which issue crypto tokens pegged one-to-one with traditional currencies, are well positioned to capture. Lower fees, faster settlement, and fragmented local banking infrastructure make the case almost right itself. DeFi's latest hack wave isn't just bad news for the protocols that got drained, it's quietly squeezing the funds that held positions in them. Liquid funds, meaning those that must meet regular investor redemptions on short notice, are especially exposed when a DeFi holding, an automated on-chain lending or trading protocol, gets exploited overnight. In an already difficult market, layering security risk on top of performance pressure is exactly the combination that forces fund managers into hard portfolio decisions fast. Morgan Stanley's head of wealth management, Jed Oldenburg, says US banks holding Bitcoin on their balance sheets, meaning owning it directly as an institutional asset, is coming, but not yet. The regulatory guardrails simply aren't in place. What's notable is that a major Wall Street firm is now framing this as an inevitability, not a fringe idea. The question has shifted from if to when. Michael Saylor, the founder of Strategy, the company that made buying Bitcoin its core business model, has signaled a pause in fresh purchases ahead of Tuesday's Q1 earnings report. Wall Street is already bracing for a loss. Strategy holds over 500,000 BTC, so its earnings are essentially a proxy for Bitcoin's price swings. A bad quarter for crypto means a rough report for the company. Saylor isn't selling, he's just catching his breath. Digital Assets CEO Yuval Ruz says Canton Network, a blockchain built specifically for financial institutions, lets banks and funds set their own guardrails before joining DeFi, or decentralized finance, the ecosystem of lending and trading that runs without traditional banks. Unlike open public blockchains, Canton lets institutions filter out bad actors at the entry point. The pitch is simple: get DeFi's efficiency without surrendering the compliance controls your legal team requires. Bitcoin crossed back above $80,000 as fresh capital flows entered the market, but traders aren't popping champagne. Hedging activity, meaning bets placed to protect against a price reversal, is elevated, suggesting most pros believe this move could stall. A breakout, a sustained push past a key resistance level, needs both volume and conviction, and right now the market has one without the other. Watch the 85,000 range for the real test. That's today's crypto news. I'm bit-dogge. See you tomorrow.